Welcome to the Deep Dive, where we dig into the week's biggest stories to pull out what really matters. And wow, what a week it's been. If you took even a quick look at the markets, you probably saw red, lots of red, both traditional stocks and, digital assets made you think, oh boy, here we go. But underneath all that turbulence, there's this really fascinating counterstory building, a lot more optimism around digital assets than you might expect.
It's a real split screen, isn't it? On one side, you've got these big macroeconomic moves in the U.S. making everyone jumpy. But on the other side, we're seeing this, frankly, unprecedented wave of companies and institutions buying up Bitcoin, Ethereum. It's almost like they're looking at a completely different future than the day-to-day market swings suggest.
Exactly. And that's what we're diving into today. Our mission here is to unpack these two sort of conflicting stories. We want to find the connections, maybe some surprising ones, and help you understand why, even with all the market nerves right now, the long-term picture for crypto seems to be hitting a real turning point. And not just in the US, but, globally. We're pulling insights from a great Thon Capital Crypto Finance YouTube video packed with the latest data. Ready to jump in?
Let's do it.
Okay, so let's start with those headlines making everyone nervous. The charts looked pretty rough. Widespread red, like you said, crypto and stocks. What was the main spark?
Yeah, that immediate reaction, all that red, that was mostly tied to President Trump signing an executive order on tariffs. And this wasn't just a minor adjustment. It's pretty significant. And it's set to kick in just 1 week from when it was signed. Okay,
tariffs. What kind of adjustments are we talking? Small tweaks or like major hikes for these countries?
Oh, these are pretty substantial hikes. I mean, look at Canada. Their tariff jumped from 25% up to 35%. That's a big leap. Serbia also saw a big one, 35%. And then you've got a whole list: Norway, Pakistan, Philippines, South Korea, Sri Lanka, Vietnam seeing increases typically between 15 and 20%. South Africa's up at 30%. So yeah, it's a much more aggressive posture than we saw before.
Right. Now, I noticed Mexico wasn't on that immediate hit list. What's the story there? Any special treatment?
Mexico's the exception, yeah. They got a 90-day extension on their existing agreements. So that means they still face the 25% on autos, 50% on steel, aluminum, copper. But in return, Mexico agreed to immediately drop all their non-tariff trade barriers. And new negotiations are supposed to happen within those 90 days. So it's kind of a pause on new tariffs for them while they talk.
Gotcha. So this is quite different from the earlier situation, right? After that April 2nd announcement, it was mostly 10% tariffs, kind of temporary. These new ones are the real deal.
Exactly. That 10% was more like a placeholder. These higher percentages, the ones taking effect now, are much more definitive. And that's why the market reacted so strongly.
Okay, so while all this tariff drama was unfolding, what was happening over at the Federal Reserve? Did they offer any calming words or actions?
Well, the Fed decided to keep interest rates exactly where they are. That wasn't a total shock. But Chair Jay Powell's tone, it was described as neutral, but with a hawkish lean. The really crucial part was there was absolutely no signal about a rate cut in September, which, a lot of the market was really hoping for.
Rose September cut signal. And how did that go down, especially, politically? Any big reactions?
Oh, definitely. President Trump reacted pretty strongly. He went on True Social and really laid into Powell, called him too late, too political, even a total loser, causing trillions of dollars in damage. It was a very, very direct and public criticism. Shows the kind of pressure the Fed is under.
Wow. Okay. So Fed holding firm, political heat rising. What about inflation itself? We got the latest PCE numbers. What did they tell us?
Right. The PCE data came out. Overall PCE inflation was 2.6%. The forecast was 2.5%. It was 2.4% before. So up a tiny bit. Core PCE, which strips out food and energy, that came in at 2.8%. That was the same as the prior month, but just slightly above the 2.7% forecast. So basically the numbers ticked up a little, but they mostly just kind of tread water. No big acceleration, but no real drop either.
Treading water. But it seems like the White House and the Fed see this very differently, especially with these new tariffs. What's the White House saying?
The White House view is basically that these tariffs won't really move the needle on inflation much, if at all. They're calling it a one-time impact, not something that creates ongoing pressure. So from their angle, there's no reason the Fed shouldn't just cut rates immediately.
And Chair Powell, still urging caution.
Still urging caution, exactly. Powell is sticking to the line that they need more time to see how these tariffs actually filter through to goods prices and then to overall inflation. He's just not ready to make a move based only on the current data. Patience is his watchword.
Seems like a standoff. But I heard about this other data source, Trueflation. What is that, and does it offer any clues about who might be right or where things are heading?
Yeah, Trueflation. It's a private company, and they track inflation data daily. The interesting thing is their data supposedly leads the official government numbers by like 30 to 45 days. And what their data is showing kind of supports the idea that, yeah, inflation might tick up a bit from the tariffs, but then it's likely to settle back down around that 2% target. So maybe it suggests the White House view of a temporary bump isn't totally off base. But still, the Fed's going to wait and see.
Okay, so for you, our listener, trying to read the tea leaves, that September rate cut, what's the market thinking now?
Well, if you look at the CME futures market, that's where traders bet on this stuff. The sentiment has shifted significantly. Right now, about 61% are betting against a September rate cut. That's a big majority. So expectations for the first cut, maybe the only cut this year, are now pushed out mostly to October. The market's basically taken September off the table for now. Okay, that's a lot to process on the macro front. Tariffs, a cautious Fed, political fireworks. Definitely paints a picture of uncertainty. But here's where things get really interesting. Let's pivot to that crypto counter-narrative we mentioned. Because despite all this economic nervousness, we're seeing this incredibly strong trend of large companies, institutions, just accumulating digital assets.
It's fascinating, isn't it? While the broader market is, reacting to every little piece of macro news, these big institutional players seem totally focused on the long term with crypto. It's just such a stark contrast. Short-term jitters versus long-term strategic buying.
So give us some examples. Who's doing this significant Bitcoin buying? Okay, well, there's a really diverse group. You've got Money Technology. They're a big ride-hailing app in Turkey. They just announced they're putting 20% of their cash reserves into Bitcoin. And they're even thinking about bumping that up to 50%, plus adding Ethereum and Solana, too.
Wow, a ride-hailing app. Okay, who else?
In the U.S., the Smart Web company, they just picked up another 225 Bitcoin. That brings their total stash to over 2,000 BTC, worth around $242 million now. And then, of course, there's MicroStrategy. Michael Saylor is just relentless. They announced another stock issuance, STRC this time, for $4 billion. That's right after a $2 billion one last week, all specifically to buy more Bitcoin.
Saylor's commitment is just something else. Any other big names, maybe outside the U.S. as well?
Oh, yeah. Emperor Digital, they do blockchain infrastructure and mining here in the U.S. They had a 303 Bitcoin, now holding over 3,800 BTC. Robin Energy, they're a global energy transport firm, but U.S.-based. They've officially adopted Bitcoin as a primary reserve asset, planning to allocate up to 50% of their cash. They started with $5 million. We're also seeing buys from trading firms like Virtual Financial, and even Coinbase itself keeps buying weekly, like they mentioned in their shareholder letter. And internationally, yes, companies like Fragbay Group and Pixel Fox AB in Sweden, Phoenix Strip in the UAE, AMP in Japan, they're all getting into. So this isn't just a couple of outliers. This is a broader trend. What's the big message here from this institutional buying spree? I think the big message is that these sophisticated players see digital assets as a serious, long-term strategic holding. Whether it's a hedge, a bet on future tech, or just a better reserve asset, they're looking way beyond the current noise. It's a major vote of confidence in the fundamental value proposition, regardless of what the Fed does next month or what tariffs get announced.
That's a powerful signal. Now, is this accumulation focused only on Bitcoin, or are they branching out?
That's a really important point. While Bitcoin is still king, we are absolutely seeing a growing interest in other assets, especially Ethereum. Take Tether Machine, for example. They're a crypto infrastructure company going public through a SPAC. Get this. They hold about 334,800 Ether. That's worth around $1.25 billion.
$1.25 billion in ETH.
Yeah. It's actually more ETH than the Ethereum Foundation itself holds. It makes Tether Machine the third largest ETH holder in the world. So yes, definitely diversifying.
Incredible. And what about the ETFs? Are we seeing money flow into the Bitcoin and Ethereum ETFs reflecting this institutional interest?
The ETF flows have been a bit mixed lately. Bitcoin ETFs had some positive inflows yesterday, but they were kind of weak. Today started negative, though we always have to wait for BlackRock's numbers. They can swing things. Ethereum ETFs are similar kind of choppy flows. Again, BlackRock often makes the difference there. Interestingly, the Solana ETFs seem to be consistently pulling in positive flows. So a bit of a mixed bag on the ETF front recently.
Okay, so institutions are buying, ETFs are a bit choppy, but this institutional confidence, seemingly ignoring the macro picture, leads us right into another surprising area, U.S. crypto regulation. Despite all the economic worries, the news on the regulatory front in the U.S. is sounding, well, incredibly positive. It feels like a major strategic shift is underway.
It really is. It's like a complete U-turn. The U.S. seems to be moving decisively away from that old regulation by enforcement approach. Instead, they're focusing on creating clear rules, fostering innovation. The stated goal, coming from the top, is literally to make the U.S. the world's crypto capital.
And a key part of this is something from the SEC called Project Crypto. Tell us about that.
Right, Project Crypto. This was launched by the SEC chair, Paul Atkins. He's a Trump appointee, known to be supportive of crypto. He announced it at the America First Policy Institute. It's basically a big reform program designed to modernize securities rules, specifically for crypto and blockchain. And it lines up perfectly with President Trump's stated aim of making the U.S. the global hub for this stuff.
Okay, modernizing rules. What are the key parts of Project Crypto? How does it actually help projects and companies on the ground?
There are a few really big pillars. First, they're working on new rules to finally bring clarity to token definitions, especially around things like ICOs and airdrops. The idea is to clearly say, this is a security under the SEC, and this is a commodity under the CFTC. That clarity alone is huge.
Yeah, just knowing the rules of the road would make a massive difference. What about these ideas of safe harbor and innovation exemption? They sound really important for startups.
Oh, they're critical. The safe harbor concept would basically let new projects start out centralized, maybe for fundraising, as long as they have a clear plan to decentralize later, without instantly being slapped with securities violations. And the innovation exemption, that's for new, creative services that might be in a bit of a legal gray area initially, but are protecting investors. Think about how Uber started pushing boundaries, but offering a service people wanted. This exemption aims to give innovative projects some breathing room, reducing that fear of immediate shutdown.
That really sounds like it could unlock a lot of innovation. What else is the SEC planning under this project?
They're also pushing hard for tokenization, putting traditional assets like stocks and bonds onto blockchains. They see that as a way to open up global capital flows and cut costs. And importantly, they're specifically committed to ending past policies that really choke the industry in the U.S.
Which specific policies are they getting rid of?
Two big ones. They're explicitly calling out and ending Operation Choke Point 2.0. That was the sort of unofficial pressure on banks to deny services to crypto companies, even legitimate ones. And they're also ending SAB 121. That was the accounting rule that made it super expensive and risky for banks to hold crypto for customers, basically forcing it onto their own balance sheets. Getting rid of these is directly aimed at making the U.S. attractive again for crypto businesses, bring them back on shore.
So it's a total shift, moving from punishing after the fact to setting clear rules up front. And this isn't just the SEC acting alone, right? The White House is involved too.
Exactly. It all ties back to President Trump's Executive Order 14178, the one setting the goal of being the world's crypto capital. The White House has its own digital asset task force, and their roadmap lays out three main goals: stop regulation by enforcement, build a clear legal framework for innovation, and kickstart a golden era for crypto led by the U.S.
Okay, a golden era. What specific recommendations are coming out of that task force that you, our listeners, should be aware of?
It's pretty comprehensive. For the market structure, they want Congress to pass laws like the Clarity Act. This would give the CFTC clear authority over non-security crypto spot markets. They also want to integrate DeFi into traditional finance and have both the SEC and CFTC issue clear guidelines on things like registration, custody, trading the nuts and bolts.
And what about banking access? That's always been a sore spot.
Huge focus there. They want to fully kill Operation Choke Point 2.0, really welcome crypto firms into the traditional banking system, let them open accounts, get custody services, support stablecoins, basic financial plumbing that was often denied before.
Stablecoins are obviously huge. Any specific laws or policies mentioned for them?
Yep. President Trump actually signed the Genius Act back on May 18th, 2025. That's supposed to be the first real legal framework for stablecoins in the U.S. The task force also specifically calls for an anti-CBDC surveillance act, basically protecting privacy and outright banning a U.S. central bank digital currency. That's a very strong statement against a government-controlled digital dollar.
I mean, this level of explicit government backing for crypto, it's just night and day compared to a few years ago. It really feels unprecedented.
It absolutely is. You just didn't hear this kind of language or see these kinds of policy proposals from the highest levels before. It signals a real strategic shift. They even put a quote on their report image. "Last year, I promised to make America the world's Bitcoin superpower and the planet's crypto capital. Now we are taking historic actions to make that promise a reality." Donald J. Trump.
Yeah.
Pretty direct.
Yeah, very direct. Now, speaking of crypto being used in different ways, let's shift gears globally for a second. What's going on in Bolivia? I heard something pretty radical happening there.
This is really fascinating, and it moves beyond crypto just as an investment. Bolivia just signed a cooperation deal with El Salvador. But get this, they want to develop crypto as a potential replacement for their traditional currency, not just, an asset to hold.
Wait, a replacement for their national currency? Why would they consider such a huge step?
Well, Bolivia is in the middle of a really severe financial crisis. Their own central bank is actually calling crypto a reliable option right now. Their goals are basically to modernize their whole financial system and give more people access to financial services. The root problem is that their currency, the Boliviano, has devalued badly, and there's a massive shortage of foreign currency, especially U.S. dollars.
So people literally can't get dollars, and their own money isn't stable, so they're turning to crypto out of necessity.
Pretty much exactly. Bolivia actually lifted a ban they had on crypto back in June 2024. Since then, trading volume has exploded. It went from zero to $46.8 million in just 3 months, and by June 2025, it hit nearly $300 million. People are actually using crypto for everyday payments because the Boliviano is so shaky and dollars are just hard to find. Even their national oil and gas company started accepting crypto payments just to deal with the dollar shortage and import problems.
Wow. So connecting this back, we usually think of Bitcoin as volatile, right? But in a place like Bolivia, maybe that view changes.
That's the key insight here, isn't it? For countries where the national currency is incredibly unstable and inflation is sky high, something like Bitcoin, or maybe even more usefully, stablecoins pegged to the dollar, can actually seem less volatile and definitely more accessible than scarce physical dollars or a rapidly collapsing local currency. It completely flips the script on how we perceive crypto risk. It moves from being just a speculative bet to potentially being a tool for basic economic stability and access when the traditional system breaks down. Volatility is relative,
What a fascinating journey through this week's economic maze. We started with that immediate market shock, the reaction to new tariffs, the Fed holding steady, President Trump's very vocal responses.
Right, the short-term jitters. But then we saw that deeper long-term story unfolding, huge institutional buys of Bitcoin and Ether showing real strategic conviction. And coupled with that, this incredibly positive regulatory shift to the U.S. Project Crypto, the White House task force, a clear signal they want to lead the way.
And we wrapped up with Bolivia, showing how crypto isn't just an investment thesis anymore. In some parts of the world, it's becoming a real-world solution to fundamental economic problems, challenging how we even define its purpose.
It just highlights how fast everything is moving, different places, different companies. They're all finding unique ways to use this technology, often way beyond what people first thought possible.
So here's something to think about. We live in a world facing constant economic change, information overload. Could these digital assets, which started out looking purely speculative, actually become core parts of global finance? Maybe even tools for national economic stability, stepping in where older systems are struggling. What part of this rapidly changing picture stands out most to you?